Hi everybody and welcome to the midweek video. This is Wednesday, June the 1st, and it's hard to believe it's already June of 2022 here. So let's get down to where we're at so far this week and try to figure out where we might be going for the rest of the week here in this shortened trading week. And starting out with a bit of a midweek review where we've been so far. Of course, shortened trading week with the Memorial Day holiday on Monday. We've had some pretty positive earnings and comments out of some of the companies that have been reporting, the few that have been reporting since we're already through the major part of the earnings season. So companies like CRM, Salesforce, and Capri both came out with some very positive earnings and comments. And of course, they popped up on those results. So I guess that's a positive there in the market. So after the bounce back up that we did get last week, we had that really nice bounce off a bottom here. We seem to have hit an area of resistance on the indexes. So Tuesday and Wednesday both have been red days, but not seriously red. They certainly aren't finishing near the lows of the day on either of those 2 days so far. But the trend has been to pull back after this big bounce higher that we had from the previous week. So, and as before we get going here and looking at some of the charts, let's take a quick look at my new book on Amazon. Just published it May 31st, Profiting as an Active Trader. So kind of a continuation from my original book, How to Swing Trade, in 2018. So that is up there now and available for people that are interested. So some of the stuff I did go over from the previous book, just because I felt that if somebody had not read my previous book, they probably needed some background. So there is some stuff that is repeated in this book, but I've tried to cover a lot of other topics that I did not hit in the first book as well. So including some stuff on options. So hopefully you'll find that interesting. Let's get on and look at some charts. Start out with the 2-year and 10-year Treasury notes. You can see here we're still sort of flatlining after this big run up on the yield on the 2-year. Kind of the same story with the 10-year as well, although a little bit more choppy. We did get over 3% there, pulled back, and kind of a little jury's out as to whether this is a B, C, D pattern. If we're going to continue higher, or if we're just going to chop along sideways here. Here's a typical A, B, C, D pattern. Continuation move. We got one here as well, a little bit more sloppy, but question is, are we going to start to break to a new high, which is 3.12 on this chart? So RSI is starting to turn back up, so is stochastics. So certainly trend is returning, and again, a break of that 3.12 would be a continuation for a trend higher. And as I mentioned on the weekend, I kind of thought we were, on all these indexes, we were sort of rallying into, last week we kind of rallied into an area of resistance, and this is exactly what we saw. Friday we got right back up to an area of prior support, which became resistance. And Tuesday, Wednesday here today, we've had pullbacks on pretty much all the indexes. And I think as I go through here, you'll see that pretty much the same story on everything. You can see here the Dow, 5 days up, and now we've had these 2 days of pullbacks after sort of rallying into an area of prior resistance right here. Pretty obvious, and our RSI is kind of flattening out here. Stochastics are turning down. So it's going to be interesting to see what we do here, whether we continue to hold. We have gotten through this moving average, and I'll make this sort of comment for a lot of the indexes. Volume today was pretty light. We did have a fair amount of selling on Monday, compared to the buying that happened the previous 4 or 5 days of the previous week. So volume was a little lighter today on this sell-off. Let's take a look at the Qs. Again, same thing here. Stalling action Tuesday, and then really more selling here today. Again, volume still pretty light here. So not a lot of institutions participating in the buying last week or the selling this week so far. Again, the SPY, sort of same story. All I'll say is we are finishing off the lows of the day, albeit not by a significant amount. Tuesday was a little bit better with a bit of an indecision candle, but this was more of a bias to the downside on all of these indexes today. The Russell again bias to the downside, but certainly well off the lows of the day, even on the Russell. So, question is, are we gonna put in a higher low here? So we put in a higher low right here. Is this pullback going to be a higher low, or are we going to chop sideways? But right now we've pretty much established an area here where I'd be looking at it as resistance on all those indexes and a challenge for the indexes to get through at this point. Certainly any break of some of these resistance levels which have been set on all the indexes will be a positive sign, and probably we'll see a move higher. The VIX, again, really no fear. Even though we were down today, the VIX actually finished lower on the day. So again, that's a sort of a positive sign that maybe we're not looking for a huge pullback regardless of what's happening right now. And the dollar had this massive run up, had a bit of a pull, we had a big pullback, lost this trend line for sure. Made a lower low here, but now we're moving back up today as interest rates start to creep up again, as we looked at on the treasuries a few minutes ago. And look at the Bitcoin's just boy, it's just really tried to break out here on the weekend. Weekends do tend to be a little more volatile because volume does dry up in trading. But we had some pretty significant trading over the holiday weekend in terms of volume, but really we've just rejected the 32,000 level, and we're back down sort of in this under 30,000. So not significantly positive price action on Bitcoin. So just quickly go over some of the stocks that I've had and I'm watching. I did get out of CCJ. Just didn't liked how we had this pullback, but then we had this engulfing candle yesterday, so I got out of it, and I'm looking at this 200-day moving average. We almost got there today. I was going to maybe take a re-entry on this pullback to the 200-day moving average with a tight stop around 23, and still watching that one, but I'm out of that for now. KWeb had a nice pop-up yesterday. Again, just a reverse today after getting back up into some area where it's going to see some resistance. And again, Chinese stocks under a bit of pressure once again. UNG, again, we kind of just seem to be chopping. We seem to be, certainly Energy's had an amazing run. We do seem to be, after this big run up, we do seem to be getting into a lot of chop here, so I'm not trading that right now. Again, UPST, something I was watching, but again, big rejection today after hitting this moving average, making a lower high or a higher low here, and I guess we'll see if we get a bit more of a pullback. Might be worth an entry if it holds. Again, not very constructive candles here on the USO, which is the oil fund. You can see here we had a big pop up on the Tuesday, and really just sold off for the rest of the day. And today we gapped up and then sold off again. So oil looking a little bit toppy here based on these candles, and maybe due for a bit of a pullback, and you'll see that on XLE as well. Big reversing candle yesterday and kind of an indecision candle today, which caused me to back right out of it. So right now things seem a little bit uncertain. We're not sure if we're going to break out or if we're going to break down again. So a lot of people have mixed views on it that I've been listening to. A lot of the talking heads think we're going to go retest some levels that we tested before, lower levels. Some people say the bottom's already in, but right now for sure we are just sort of consolidating. So best to sit and wait and watch and just see which direction things decide to go here. But some headwinds and some other things that are positive, like still getting some good earnings reports, and the VIX still going lower and going lower. So let's take a wrap here. Okay, so let's just wrap things up here. There, look ahead for the remainder of the week, Thursday, Friday, what to watch. Of course, these are your support and resistance levels for the various indexes. Right now, we seem to be kind of sitting in the middle of these support and resistance areas. And again, just after that big run up yesterday, I had flagged that on the weekend that we were probably running into some areas of resistance on the weekend after that nice run. And of course, that's exactly what we're seeing. Not really much in terms of economic events to watch for the rest of the week. We do have the regular Thursday jobless claim numbers and earnings on deck. Of course, we had Chewy after the hours today, and it had a bit of a beat. They were expecting a loss. They were a beat, so it's up after hours. Pretty heavily shorted stock. It's about 22% short float, so getting a bit of a squeeze there, I'm sure, as well. GME, at least after the earnings report, was flat as of making this video. Thursday, we've got CEIN, Sienna, Hormel, and then after the close Thursday, CrowdStrike, ASAN, and Lululemon could be another interesting report out from a retailer there. And then Friday after the market close, that should be AMC. After market close, we've got Aurora Cannabis reporting, so kind of unusual that company reports after the close. So that's it, everybody. Again, hope you've had a good week so far in this shortened trading week. And of course, as always, you can join us at 8 o'clock pre-market show live on YouTube, and takes you right up to close to the open. And then, of course, members will be trading the open with us at 9:30. So hopefully see you there, one of all those events. And have a great rest of the night, everybody. Bye for now.